I tend to pay more attention to the market's reaction to news than the actual news itself. So I've got some thoughts on that. But as far as the inflation numbers, it's no surprise. If I'm surprised about anything, it's that they're willing to show such a high number, because we know that the number is actually even higher than that. And you could make a compelling case that the inflation we're seeing right now is the highest in our nation's history on an official basis, or at least going back, several decades, even past the 70s. Because back when they reported double-digit inflation in the 70s, the numbers were much more accurate. They used generally accepted accounting procedures. Now, they use hedonics and all of these other metrics to suppress that actual number. So even that 6.2% or 6.8% is much lower than reality. We know that the price we're looking at is the price set in the paper markets. I think most of your listeners know that. And it's based on supply and demand of paper contracts that can be issued at will by these big banks. And we see these banks shorting into price rallies. Now, that's not, I don't want to say it's like some imminent sell signal, but it's not what we want to see. We want to see these bankers letting it go, but instead they're shorting into the price rallies. And that's reflected in the increasingly, we're not quite bearish yet, but it's reflected in the commitment of traders report. What's concerning is that, that we're right near this key resistance level in gold. In silver, we almost came up to the 200-day moving average as well. So I guess the concern isn't so much that there was a little bit of profit taking, but more that, it's obvious that based on the volume. Today's volume in silver was the highest buying volume we've seen going back, I think since the silver squeeze on February 1st. So this is massive volume. And to me, this has the fingerprints of the big banks shorting into this rally. That's the concern for me. Buying pressure is going to overwhelm it. I am highly confident in that. And that's where I put my own personal money. I think silver and gold are going much, much higher. The question is, over the next intermediate term here, over the next month or two, are we going to see some more backing and filling, or are we off to the races right here, right now? And I think how we close the week right here and then the month is going to be the first big indicator on how, the next quarter unravels. I think silver presents the best risk reward ratio over the next few years. We're seeing the dollar and the metals rally in unison today. And that just shows, there's not always a perfect inverse correlation between the dollar and metals. And I think probably some of the reason we're seeing that is, we've talked about this before, but the dollar index is just a measure against other fiat currencies. And, the Bank of England the other day, for example, decided not to taper when everyone thought they were going to. So other currencies can fall. And if they're falling less fast than the dollar, it gives the appearance of dollar strength. But really, all of these fiat currencies are on a downward trajectory in terms of purchasing power. Yeah, and silver, you can see right here is the 200-day moving average. That is currently just above $25, $25.45. And we didn't quite get there today, but that 200-day moving average is really so important because I'm pretty sure it's the biggest input to these institutional trading algorithms. And when price is trading above a rising 200-day moving average, those algorithms tend to be in a buy the dip mode. So if we can get back above that 200-day moving average, that would be pretty significant. So, you've got support at the lower rail. And then once we get above the upper rail, I think we can say the lows are very likely in, and we're likely to see higher highs and higher lows going forward. But we've got just a little bit more work to do in the silver chart before we can say that with conviction. I think of it as like multiple support levels, and I kind of scale in at each. So the first one in gold would be the 200-day moving average. That's right around $1,800. That round $1,800 number is key psychological support anyway. Below there, you've got the recent low of 1720, and then the big support is 1675. I really think that's the low. I would be stunned if we go below 1675. Of course, anything is possible. But if we did pull back to 1675 again, I would fully expect that to hold. And that's where I would look to add aggressively to my personal positions. For me personally, with physical metal, I just look at it as exchanging currency for money. And I just do it every month on an automated basis. I don't even think about it. I don't care what the price is. I'm just trading currency for metal every month. So I don't try and time it. I'm keeping my little bit of remaining cash in my mining stock portfolio is in the event that we do back test the recent lows. If that happens, that's where I would really back up the truck personally. We've all heard this before, but it's good to remind ourselves of these things, where we are in the big picture story here. And we're in a place right now where major governments around the world, especially the United States, are in a situation where their debt and the unfunded contingent liabilities are mathematically impossible to repay in today's dollars. It just cannot happen. There's a 4-letter word for why that's impossible, and that 4-letter word is math. So they have two choices. They can default honestly, or they can inflate away. And history suggests that 100% of the time, these governments choose to inflate away the debt. And throughout history, silver and gold have been the prime beneficiary of this exact environment that we're in right now. Yeah, the price action over the past year has been frustrating, is putting it lightly. I mean, it's just been downright, it's been terrible.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
I have bad news for you. If you're not rich by now, you're screwed. And if you're in debt, you're even double screwed. How so, you might wonder? Well, the sad truth is that you're working your whole life to make someone else rich. The mega corporations, the banks, the politicians, everyone is getting richer. They get your money. And what is even worse, they get your time, they get your life. You are not even in a rat race, you're in a financial prison. But what could a solution for you look like? Honestly, I don't know, but I know what a solution for me would look like. It's very simple. I use whatever money I have and I multiply it with 1,000. This could make my life much easier and probably yours as well. If you have $1,000 available and multiply this with 1,000, I believe that this could solve some financial issue for the one or the other. Of course, if you're ugly, you would have to multiply it with much more than 1,000. My name is Markus Dan, and this is what I decided to do. I decided to 1000x my money. This is not a joke. I know what you may be thinking. What is this guy talking about? How should this work? This is not possible. Well, I made a detailed video where I laid out my plan. And some clever folks might even want to look at this plan and copy it and do exactly what I do. This is just a little hint on the side. You have two options. You leave, you forget what you have seen. You do whatever you're doing and you hope that somehow you get some other results. Good luck with that. Or you click the link below the video. You enter your email address because I'm not showing this to everybody. You at least watch my video on how I plan to 1000x my money. The choice is yours. Make the right choice. Join me. See what a different future you could have. See at least how I intend, how I plan to do the 1000x. So click on the link below, enter your email address, and I see you on the other side. Your Markus Dan.